Okay, we're ready to go. Hi, everyone. I'm Anurag Sehgal, and I manage the data analytics organization within global markets at Credit Suisse. Uh, Thanks to the Tableau team for having me here speak about some of the things that we're working on at Credit Suisse when it comes to data analytics. What I'm here to talk about is really how data analytics is driving our client strategy, uh, allowing us to achieve regulatory compliance and enable us to efficiently manage our operational risk in supervision and controls space. Uh, we'll do a quick introduction. I'll talk about what our Tableau practice and partnership looks like, and then we'll deep dive into a few key areas around how we're really monetizing our data when it comes to clients, how data analytics is enabling some of the regulatory and controls landscape, and the desperate need for data analytics in these areas. So I've been at Credit Suisse for the last 12 years, work with risk, finance, banking, trading, sales, in various capacities over the last 12 years, and I've really had a vast amount of experience in dealing with large amounts of data across the organization. And we've changed our data strategy over the years as we've gone around. The data analytics organization, our mission statement is to deliver best-in-class data analytics that allows us to generate and protect our revenues, but also to achieve reg compliance, be more efficient as an organization, and really leverage capabilities across multiple programs and initiatives that leverage core data analytics capabilities. The way we're structured is in the form of verticals and horizontals. We deliver services to external partners, external bodies, as well as our internal teams. So when it comes to external partners, we deliver analytics to our regulators. We deliver analytics to our external clients. But we also work across the organization through the pyramid of everyone from the C-suite to the end salespeople, traders, research analysts, but also various power users within the COO and CFO community. The verticals, the way we're structured amongst the verticals are really to enable key goals for each of those verticals. So I'll talk about some of these verticals and talk about how these horizontals play a key role in delivering value towards those verticals. Client and content is really all about measuring value that we deliver to our clients in the form of profitability with clients, resources that our clients consume versus revenues that we generate from them, how we segment our clients, how we cover our clients, how we can efficiently understand what our clients are interested in, and drive real value to our clients, leveraging the power of data and analytics. Content really is all about most of the research and analytics that our clients consume in making clear decisions around their portfolios, around their trading activity, and a lot of that is again heavily reliant on companies that we cover and data around those companies and the macroeconomic situations across the globe. When it comes to regulatory initiatives, there's a wide range of regulations that the financial industry is being hit with, everything from CCAR, which is a capital stress test, to Volcker, which is part of Dodd-Frank, to MiFID II in Europe, to some of the regulations in Asia with the MAS in Singapore, and there's a whole range of regulations that again require a large amount of data to not only be understood by our frontline, but also to be submitted on a daily basis to our regulators. And the third key vertical is really around supervisory controls and analytics, and that's really about how we mitigate the risk of being fined for unauthorized trading, how we manage our operational risk environment, how we control our trading environment in a better way, and how we provide enough supervisory and supervision capabilities so we don't get into those kind of situations. Again, large amounts of data that goes into being able to derive that level of behavior analysis. So in terms of verticals, again, all of these initiatives look at a lot of public and proprietary data, everything from our trading histories to holdings to balance sheet, risk-weighted assets, to all kinds of financial metrics, but also a lot of unstructured data around what our clients' feedback is about, what are we speaking to our clients about via email, via chat, via phone logs. So there's a large amount of unstructured data that comes in here as well. Over the last 2 years, we've really started to set up a predictive analytics and data science practice to evolve and leverage information and data to be able to drive predictive decision support. And we'll talk a bit more about that as we go forward. Business intelligence and data visualization is really where Tableau plays a key role for us in delivering that value to our end clients and to our internal partners. And of course, a lot of this insight is delivered in ways that leads to actionable decisions, and it's part of the daily workflow of our clients, of our sales teams and our research analysts. So that allows them to really take clear action while they're at their desk or on the road. So before I dig deeper into some of these initiatives, just wanted to touch on what have we done in terms of enabling target state when it comes to business intelligence in particular and Tableau in general. So we've been working with Tableau for the last 5 years. We've matured as a practice, and we've matured our partnership model with Tableau quite significantly as well. What has that meant? Well, we've identified a large number of use cases and users and initiatives where we are really starting to use Tableau and mature the use of Tableau with our end user community. And we use Tableau as we've driven that self-serve analytics vision with a large amount of training with different forms of training, both in person to group settings. The engagement with Tableau has been very strong as well. So what we've tried to do is essentially ensure that all feedback that we're getting on Tableau feeds back into the team. And a lot of what we've seen over the last 2 days is really very close to our heart, because it's part of the feedback that we've provided to Tableau in driving that value. Well, because we're a Swiss bank, and there's definitely a lot of work that we do on-prem, we've actually set up an internal community site, so folks across the organization can share what they're doing with Tableau and can collaborate on a common vision on Tableau. And of course, none of this would be possible unless we had core enterprise scale infrastructure, and enabling that infrastructure is a key goal for us. I mean, when it comes to number of users, I mean, I think I talked about external users and internal users. Our target state is about 6,000 internal users and about 20,000 clients, which will continue to grow as we move forward. So digging in a little bit more into the data analytics practice when it comes to monetizing data about our clients and driving client intelligence. So what I wanted to do is just provide a bit of color on what do I mean by that, and go into a little bit more detail there. So these are sort of pillars around how we see our client strategy evolving. And by client strategy, we've got a large segment of clients, and we're constrained when it comes to resources as a strategy. We need to allocate the right level of resource, and by resource I mean our sales coverage, our research analyst time, our events and conferences that we host, our corporate access that we host, balance sheet and economic capital, risk-weighted assets that we allocate to clients. Those are key resources for us that we want to make sure that we're allocating those resources to the right set of clients, and that generate and maximize our PTI and our profit. And in the client strategy, we've got clients that we call out as high-touch, white-glove service clients, where we have sales coverage allocated to these clients. And then we have low-touch coverage, where we want to drive more electronic-based coverage and more sort of automated solutions that drive that coverage and resource consumption. So client targeting is, and a lot of these capabilities that you see on the slide are catered towards driving that client strategy and covering our clients better and maximizing that revenue base and that profit with those clients. Client targeting is essentially how we not only want to cover our low-touch clients, but also high-touch clients with intelligence that we have on them. Essentially, it is nothing but a recommendation engine behind the scenes that is looking at past activities of our clients and clustering clients into pods to say, what is a client truly interested in? Which stocks is he interested in? Which bonds is he interested in? What sectors does he care about? Does he care about specific technology stocks? And so what that does, or what that allows us to do, based on a lot of the historical data we have on our clients, public and private, be it 13Fs, holdings, SEC filings that these institutions have, or our communication logs with them when we're speaking with them. What are we capturing in terms of their interests? To what are they logging on to, and what are they browsing on our portals and on our on our platforms, but also public platforms where we capture usage. So a large amount of data, both public and private, that allows us to say what is the client interested in, and that drives what we deliver to them in an automated basis, be it research, be it trade ideas, that allows us to very closely sort of connect with our clients on any news activity on a particular stock or a particular currency or a particular macroeconomic situation. So that's really how we effectively and efficiently target our clients with anything and everything. So that's really the engine that drives that, and the delivery of these ideas comes through some of the business intelligence and data visualization tools that we leverage here. Relationship network is really interesting as well. So think of relationship network as a social network of who knows what clients best. So across the 20,000 people that work at Credit Suisse, we all have great relationships, and a lot of these relationships can be tapped into to monetize revenues and to be able to really connect with clients in a better way. So who knows whom, or relationship network, or relationship science is all about a graph of who knows what clients best. If I work with a CEO at a particular tech company, and I started with him, or I'm on a nonprofit board, at the same time as someone who's in a particular company that we're interested in, we're able to establish that there is a relationship, there is an implicit or explicit relationship with that client that allows us to really, be able to connect with that client in a much more meaningful way. We also capture, obviously, what that client is interested in. That allows us to really create that full circle and that profile around a particular individual or a particular corporate. I mentioned resource consumption, and in a resource-constrained world where capital is a constrained resource, oftentimes we're challenged with reducing our balance sheet or allocating the resource in a more optimal manner. And so there's a level of optimization that's needed, again, to be able to really maximize or minimize the impact on our revenues or our profitability. And so there's these optimization models, again, is a form of analytics that allows us to really get that value. Time study or labor study is a really interesting element as well. And what we look to capture is how effective are our salespeople. What % of time are they spending with what clients? And we do that by really looking at the value of all of the logs that are captured on who's emailing what people, who are our salespeople speaking with on the call, on a phone call, who are they chatting with on Bloomberg or other chat platforms, who have they attended events and conferences with, which allows us to really create meaningful metrics and analytics for our management teams to say, are we focused on the right clients? Are we spending the right amount of time with our clients? And that's really what that time study allows us to do. Again, a lot of this is in different levels of maturity, but we're seeing a lot of traction in how data can be monetized in these forms. One of the other growing demands for us is for our clients and our stakeholders to be able to access information and key decision support on the go. As I'm sure everyone over here probably deals with clients that they work with as well. The need for us is very similar. Again, we want to see a holistic view of our clients while a salesperson or key account manager is visiting a client. He's on a plane. He needs to be able to see who met with the client last, what key financial metrics do I have on my clients, and be able to really use that information in a meaningful way when speaking with a client or meeting with a client. We also have client-friendly views of the same information that we can actually share with clients and look slick while doing that, while sharing information on an iPad or iPhone. My supervision, and we'll talk about supervision and controls in a little bit, but when it comes to key supervisory tasks and actions and red flags, What we're trying to do is really highlight red flags to a supervisor or senior manager to say, there's a problem in your business area. There's someone who's trending towards a red flag or has taken an action that you want to really review and understand better. And so you can see that red flag instantly while even if you're on vacation or not. You can actually take action on your key supervisory tasks while you're on the road or on the plane. There's a level of offline capability there as well. Of course, P&L summary. Again, these are some examples, but I thought it'd be interesting because, again, mobile is a key priority for us, and a lot of what we do on mobile is highly, creating a huge amount of efficiency and real-time, elements for our sales teams, for our bankers who are always on the road. We today historically have delivered BlackBerry-friendly emails which show daily P&L or real-time P&L of what's happening in the day, so business leaders can actually take action on collaborating with their teams. And so a lot of that we're really mobilizing in a way that allows a senior manager to really collaborate real time with his trading team and with his sales team, and be able to see what breaches or what key elements of red flags are occurring. So again, these are some examples that really highlight the element of mobile solutions that that are needed, not really wanted, but more needed by our clients. The next key area that I wanted to touch on was what we call as a program by the name of Research Smart Data Insight. So just a little bit of background before we go. We have a large research team. Their key mission is to generate investment ideas and really come out with research on both the equity side of the house, on stocks that our research analysts cover within specific sectors that we cover, as well as on the fixed income products and currencies and macroeconomic situations, including political situation. And that's a huge part of what our clients value us for. Not only within global markets, but all client segments value our research. We're ranked in the top 3 when it comes to our research and our advice to our clients. So when you see a research analyst coming out with a buy or a sell on a particular stock, that's the kind of research with a target price that our analysts come out with, more for the institutional side, but also for Ultranet with entrepreneurs. So the research department is about 300 analysts. They cover about 3,300 stocks, 22 sectors. But we also have an electronic product like Hold, which is called Hold, that extends that coverage and covers these stocks in a more electronic, quantitative way. A lot of this research is today delivered through our portal platform, our proprietary portal platform, that's CS Plus, which is essentially where research is published and our clients can access it. Clients from Bloomberg or other platforms can also connect to the same research. But all of that research is really just a PDF today. It's essentially a PDF document that our clients read. And one of our key goals is really moving it to a more sort of HTML5 digital format, and that's part of the journey there. But a bigger part of the journey is what we call as smart data or smart data insight. And what smart data insight is all about is historically our research analysts in research in the banking sector is driven primarily based on very traditional data sources. So think of company financials, company holdings, and some of the key elements of what a company comes out with in any given sector. But that's changing, and what's changing about it is every company now has a huge digital presence and have a huge digital data footprint that is a landmine of information which we're trying to tap into. And these are what we call as alternate data sources that allow us to identify leading indicators of company or macroeconomic performance and allow us to really create differentiated content for our clients that we can monetize going into the coming years, where most of the fintech companies are going to utilize most of the commodity functions, but really the advice and the intelligence will stand out, and that's going to be differentiated. Even in a sort of regulated MiFID II unbundling environment, clients are going to be budgeting for research, and unless our research can be differentiated, we're going to struggle in sort of protecting our revenues and generating incremental additional revenues. And so that's where the digital data, be it search trends, be it social media trends and sentiments, be it e-commerce data about any particular company and what discounts they're offering in prices on their products, consumer sentiment, all kinds of government data that's published, across multiple different government sites, census data as well. So there's about 400 different data sources that we've tapped into to be able to say, what sectors and what companies really identify with what data sources and allow us to analyze, whether we can really predict, truly company prices and target prices and target recommendations for these companies and for the macroeconomic environment leveraging these data sources. So a good example of that, just to give a little bit more color, is the leisure sector, right? So we cover almost every single sort of entertainment company that's out there in the leisure sector, and what we've seen as a good example is weather patterns have a huge impact on on the revenues that a lot of these entertainment companies, some of them based in Orlando, generate. Flight maps and capacities on flights that land in Orlando has a huge impact on revenues and potential elements of performance with these companies. Things like ticket prices at these parks, which you can again scrape through multiple sites, have a huge impact. And so, again, I'm not going to give you the actual math that goes behind it, but a lot of these data sources can allow us to really predict where these companies are going in a more real-time way than looking at their company financials and really running a quant model on their company financials. Another example would be the analysis we did that was published on the front page of Business Insider Online, which is the European economies and the impact of Brexit to the exports and imports from London. Again, a lot of data which could be very quickly tapped into on news and social media sentiments that allowed us to sort of predict that. Chinese imports of steel and global exports and imports of steel in the metal sector. So these are some of the examples where, for every sector, there's a set of sources that are available online that can really allow us to mine through and allow us to, predict where these sectors and these companies are going. And a lot of that is, again, visualized through Tableau and allows us to really provide, a lot of value to our clients. And the feedback from clients on this is really great. How do we do this? Well, again, there's a large data factory that we've set up around this initiative. There's a large amount of data blending, data cleaning, data cleansing, and of course, predictive, both statistical and machine learning based modeling that goes behind it. Our end objective is really, today what we're doing is we're almost handpicking the data sources that we identify with for a particular sector or a particular company. But our vision is to really come up with a more robotic data harvesting mode, which allows us to really explore in a machine-driven manner what data sources are potentially prioritized for a particular sector or a particular company in a machine-driven way versus us really saying these are the 10 data sources that are most applicable for this company. And of course, the visualization and analytics element is huge. What we're doing, there is, is integrating a lot of what we deliver via Tableau into our portal environment for our external clients. There's a large amount of security elements that come into that infrastructure. Of course, there's, again, being a Swiss bank, we've got a large amount of sort of security infrastructure that goes behind the scenes in sort of identifying our user base, as well as two-factor authentication and a lot of other factors that that were challenges in integrating Tableau into that environment. So that was really about client. What I wanted to do was just touch on some of the key changes in regulation and why data analytics is much needed in the support of these regulations. And I'll touch on a few of these, right? So CCAR, stress testing and forecasting. If you haven't heard, CCAR is a regulation that the Fed came out with, which is probably one of the most complex regulations that I've seen, and most challenging and interesting regulations that I've seen in the last sort of 15, 20 years, if not ever. And what that regulation does is it says that you must stress test under severe or 5 sets of macroeconomic conditions defined by 200-odd macroeconomic factors, including GDP, non-farm payrolls, unemployment rates, model those factors and say, how would you perform as a firm if 2008 happened again? Would you be able to retain minimum capital? Would you be able to keep the level of capital that you need to survive? And so this is a huge modeling and forecasting exercise where every business area and every business owner needs to take accountability for their business and say, and run a stress test for their business and forecast revenues, expenses, balance sheet, risk-weighted assets, operational losses under a particular stress scenario, and be able to stand in front of the Fed and large amounts of regulators and be able to say what we think our approach in these scenarios would look like. Again, a lot of public and proprietary data goes into this, and a large amount of modeling in R, Python. That again, seeing what's happening with Tableau and the integration of analytics in Tableau is going to really help us, even grow our presence there. Volcker is a similar initiative. Again, there are a large number of metrics that we're delivering to the regulator on a daily basis around inventory turnover, customer-facing ratio. So again, if you think of what happened during the crisis, what Volcker says is you must eliminate any sort of risk-taking or non-client-facing trading activity. You must shut it down. So essentially, only hedge funds have that ability to take risk in this current environment. I mean, large banks essentially, must do all businesses must be client-facing and client-flow businesses. And non-client-facing businesses have literally been shut down in a lot of these cases. And so Volcker is trying to monitor if there is a level of risk-taking that we're taking on, if there is any sort of non-client-facing activity that is surfaced through a series of different metrics that are being delivered. Recovery resolution planning is an interesting one. This is still in progress. And so that's one where, again, regulators are saying, if in the case of bankruptcy, in the case we did have an adverse scenario where a company was, it was hard for a company to manage that capital, what would their wind down plan be? So if a Lehman-like incident happened again, how would you wind down your assets? How would that sort of recovery and resolution planning phase look like over the next 18, 24 months? Now, how would you wind down your assets? So that's, again, modeling off data under these scenarios to be able to say, what does your wind down path look like? So this is, again, a good sample of regulations, but there's a large number of them that have a huge impact on our business. And again, without data analytics, it would be impossible for us to deliver any of these capabilities and deliver towards any of these regulations, because they're not regulations that you can deliver via Excel at all. Controls and supervision is again interesting. So think of an average trading supervisor or a supervisor or a business head has about 400 different actions that they must take at any given point in time on a daily, weekly, monthly basis. And imagine a trading supervisor whose key job is to make revenues, speak with clients, is having to spend a large amount of their time on actually supervising traders, and primarily because of the challenging environment that we've been as a bank. And the only way we can sort of move forward is really by looking at better intelligence and better capabilities to monitor our traders, to help our trading supervisors not have to deal with 400 different tasks, and emails that are coming from 40 different systems that they need to log on and take action on. We're really trying to bring together a joined-up view, which is intelligence-driven, that eliminates a large number of these tasks, because a lot of these tasks are truly redundant if you have the right intelligence, the right visual capability to be able to explain the behavior element of what a trader was truly doing. Things like a trader working really late at night, or trading in off hours, or off market hours, or trading during block leave, which again, for every bank you must take a block leave of 5 days in a year, where you really cannot connect to any system. And so a trader trading during block leave is really, again, an exception and should be red flagged fairly quickly. And so these are the types of things, a small example of things where looking at communication surveillance is really critical. Looking at behavioral intelligence is really important to us. And that's really what drives that efficiency, but also allows our regulators to be more comfortable with us as an organization that has a good story around controls and situational awareness. And what that means is, again, our supervisors should be able to take actions on the go, should be able to really get these red flags in one place, one single central joined up place, should be able to get alerts on the go, should be able to really, again, if they're out of office, should be able to delegate and escalate things. So there's a whole set of capabilities that come with this operational risk and controls and supervision space that leverages heavily on data analytics, but is very action-oriented, is very decision-oriented, and really aims at simplifying our environment and creating that efficiency for our sales and trading teams. Of course, none of this is stuff that we can solve for just by ourselves. We wouldn't be able to be where we are at without good partnerships, without good collaboration across all our vendors, our university partners, our fintech companies, and our utility areas. So again, we've really built a model where we partner very closely with external vendors, with software vendors, provide very clear feedback on where we want to go from a target state perspective. We mentor a large number of fintech companies. We look to solve smaller problems with specific fintech companies and grow them and mentor them, and often invest in them as well. And again, work across many university segments because we see that as a clear sort of talent pool that we can bring people in longer term and create that wealth of knowledge, not just within our organization, but across as well. And utility functions are critical for us as well, where if there are functions that we think are commoditized and are used across many banks on Wall Street, we'll partner with many other banks and sort of create these utilities that allows us to reduce our costs in these commoditized functions. So that's a key part of our strategy and allows us to really achieve our target state. That's pretty much all I had. So any questions from anyone?
Can you talk about your Tableau environments that you have from the internal?
Okay, there are no other questions. Thank you.